You know that I have to start with Cyprus because that's what's going on right now. And earlier today we had learned that there was speculation building that Cyprus would ask for more help on top of the bailout it already got. Well, here's what President Barroso said about that.
I think now we need more solidarity to Cyprus because certainly it's difficult to estimate what can be the impact of the adjustment in Cyprus in terms of the real economy. The economy was and still is too much focused on a banking sector that is going to be dramatically deleveraged. So what can be the impact in terms of the real economy, in terms of unemployment, is hard to estimate, but certainly the effects in the short term are going to be huge. Of course, we are now feeling the consequences of a model that has proven unsustainable. And I believe that in the medium to long term, Cyprus will get stronger from this situation. But in fact, I think more solidarity is needed to support Cyprus in that very critical moment Cyprus is now facing.
After the whole Cypriot process of receiving aid, how do you convince people across Europe, really, who are terrified of their bank deposits?
Look, what is important to notice is the fact that we are now working to have a better system for the future. Until now there were no rules at all. And now we are trying to establish common rules and in fact common instruments. Look at Cyprus and for instance Ireland. We have been responding to these circumstances. But if you compare for instance Cyprus with Iceland, a non-member of the European Union or the euro area, the difference for Cyprus is that Cyprus can count with 10 billion euros of the euro area countries. So what happens is not the result of the euro area or the result of the euro. What happens is the result of some business model, some behavior in the financial sector that was not sustainable. And I believe that now I'm confident that with the decisions we are taking, we'll have a system that guarantees more security to all taxpayers and all the citizens in the European Union.
Well, we haven't seen the banking union take shape. Do you think that the delay threatens to undermine some of the confidence that you're trying to restore in the banking system?
I think it's critically important, and that's one of the lessons coming also of the Cyprus difficulties, to speed up the efforts to have a banking union. We in the European Commission have been advocating that for a long time. There has been some progress, yes. Our member states have already agreed. It's a political agreement on the single supervisory mechanism, for instance. But now we need to see that translated in real legislation. So I think more efforts and speedier efforts are needed to give the confidence that is indispensable for a common currency.
You know, back when Greece was the focus, the idea of a bail-in was a taboo topic. And now here we are several years later with Cyprus and this idea of financial sector bail-in. Does it show that there is decreasing patience with some of these members as you work through to try to strengthen the euro area?
The case of Cyprus is a complete specific case. It's a case of one of the smallest economies that was over-dependent on banking. The banking system of Cyprus represented 7 to 8 times the dimension of the GDP, but very much focused on some kind of business. And so, of course, the decision at the end was to have some bail-in because there was no alternative. Even with this important bail-in, the reality is that there is 10 billion euros, I repeat, more than half of the GDP of loans coming from the euro area countries. This is amazing.
Yeah.
So we could not, the other countries could not accept to go further because that would also create an unsustainable debt path for Cyprus. That's why they consider that some bail-in was indispensable. So that's what makes the case of Cyprus, I really believe, unique and exceptional.
And President Barroso did confirm that he has received a letter from the Cypriot president requesting additional funding. It's separate than the bailout, but basically his idea there is that he thinks that Cyprus needs some leniency right now because we were talking about the economic depression that could prevail in a country whose nation was had a banking sector 8 to 7 times the size of its economy that is being forced to shrink as we speak.
Does he feel like he made a mistake at all, though, when it came to Cyprus? I mean, taxing those deposits. Are they still behind that decision?
They're trying to make the case that Cyprus is completely unique. They will say that,
I think he said unique, by the way, 4 times over the course of that interview.
Because they don't want this idea out there that this could be a precedent. They don't want people who are holding deposits in Spain and Italy to be spooked and to be worried. But in the end, what they came down to was the fact that the depositors, the uninsured depositors, were safe. They weren't going to be harmed. It was a bad idea. They backtracked on that idea. They learned from that, and it follows his theme throughout the event that we held here at Bloomberg and through the interview, and that is Europe's learning, but it is moving forward, and there has been tremendous progress if you step back and you look at what they've been doing.
And you get the sense, yet again, that there's a real commitment to keeping it all together. They'll do whatever it takes.
Absolutely. Absolutely. You've heard it from Mario Draghi, the head of the ECB. You've seen it in the bond spread since he put that backstop in there. And even EU President, the politician here, came out and said the existential threat to Europe is behind us. He said, I think I can say that at this point, because they've said that before, and there have certainly been questions, but they're working toward this European common banking system. They're working toward some of the necessary framework that they just did not have, like the United States has.
It's a long, long process. Sara Eisen, in her exclusive interview with the President of the EU, thank you very, very much.
Cyprus's $13 billion bailout is a step closer to reality. EU ministers meeting in Dublin have sent the aid package to parliaments for ratification. Euro area officials also extended the maturities on rescue loans to Ireland and Portugal by 7 years. Secretary of State John Kerry says the international community will not accept a nuclear-armed North Korea. While in Seoul, he called on China, North Korea's closest ally, to help defuse the situation. In recent weeks, Pyongyang has threatened a missile attack. President Obama and First Lady Michelle paid $112,000 in federal taxes. That's according to their returns released today. That's a rate of 18.4%. They earned $608,000 in adjusted gross income last year.
Consumer sentiment here in the United States falling to its lowest level since July. The April reading on sentiment dropped to 72.3 from more than 78, according to the index from Thomson Reuters and the University of Michigan. The reading is lower than economists' estimates and may indicate a slowdown in consumer spending. The head of Cyprus Central Bank tells Bloomberg that his institution is under attack from its own government. Panikos Dimitriadis said in an exclusive interview that the government does not have the right to sell the nation's gold reserves without the central bank's consent. He also says that he and his family have been receiving death threats from people who lost money in the country's recent bailout, which, by the way, looks like it's going into its next iteration. They say they need more money today. That's part of the problem, one of the reasons why we're seeing weakness in Europe. And Jeff Bezos appears to be one of the lowest paid tech CEOs in the nation. The head of Amazon earned a salary of just $82,000 last year. Now, here's where it gets interesting. The other $1.6 million he earned was apparently earmarked for security arrangements and travel, according to the SEC filing. Bezos was not given a raise or granted any stock awards, according to that filing.